Hi there, welcome to Kneppy Invest and welcome to May 29, 2024. We have just under 1 hour of training left. This is my second take because I went on a massive rant when I looked at one tweet and I went, yeah, I'm not going to put this rant into the video. So I'll start this recording this video again. And overall, probably one word we could describe today is weak. XJO and XAO are down by over 1%. It is a little bit surprising because the American markets weren't all that weak. In fact, the Nasdaq was actually up. Now, you might say most of the heavy lifting by the Nasdaq was done by Nvidia, up about 7% again. But I didn't expect us to be down by 1%. Now, in saying that, CPI numbers came out about 11:30, if I remember correctly, and they were higher than expected. And maybe that's why the market was down on open and has continued to go down through most of the day. However, we have seen a little bit of bounce because the market was down, or the XJO was down by more than 1.2%. Mining hasn't had a bad day. Results only down 0.12%. So the agenda for today's video is I'll go through some of the tweets, particularly focusing on some of the CPI tweets from Scott Phillips, Warren Hogan, I think his name is, and then the Moo girl, Jessica Amir. Think I did bookmark some tweets there. And then we'll have a look at the ASX Today, including the best performing indices, sectors, and also companies. And then we'll have a look at the top 5 announcements of the day. I'll be honest, I did struggle to come up with the top 5. The top 2 were easy enough, but 3rd through 5th, yeah, I wouldn't say I guessed or just picked at random, but I did have some struggles coming up with those 3 companies. I could have picked a few other companies, but there was a dearth of really interesting announcements today. And I might have a look at some charts. And before I have a look at charts, I might focus on 2 companies I know nothing about who were the best performing companies, were the worst or were the best performing companies about 15 minutes ago before I started recording this video. 2 companies I've never heard of before with ticker codes DES and COV. Okay, so let's have a look at some tweets. Some intriguing, interesting tweets. Now, they might be intriguing and interesting to me, maybe not to you. The first one is from John Trades MBA, 683,000 views in regards to someone on Wall Street Bets trying to shorten Nvidia or Nvidia over the weekend and losing $600,000 or 97.4%. I will never short. Shorting is a difficult thing to do. And the potential losses when you do short are infinity. They're $2 billion, trillion, quadrillion dollars. And that's quite a bit different than going long. The maximum amount of money you might lose going long in one position is 100%. That's it. But going short, you could lose your house. You could lose the world. And this person allegedly lost $600,000. Whether this is true is another thing, but it just highlights the riskiness in shorting. I'm not sure if I actually believe this actually happened. I've never been to Wall Street Bets, and to have a look, maybe there's proof it actually happened. Another interesting tweet in regards to written by Charlie Bilello in regard to US home prices and affordability. And it's really interesting how big of a difference there is between the US Case-Shiller National Home Price Index and the US Housing Affordability Index. We want these to be as close as possible. Right now, they're just exploding apart. So the National Home Index price is going further up. Housing affordability is going further down. That's not good. We're heading towards the middle, I was going to say the medieval times, the Middle Ages. We're only rich we're able to hold or own property, and that is not a good situation. Now, I did go on a little bit of a rant, first time I tried to record this video, in regards to why politicians won't put any measures to help affordability of housing. And the only thing I'll say right now is this. The main reason why they won't do anything is because a lot of politicians, particularly in Australia, I'm not sure about overseas, but a lot of Australian politicians have many investment properties. And the last thing they want to do is to decrease the valuation of those investment properties. So don't forget, politicians' thoughts about one thing and one thing only, themselves. They don't care about the country at all. Maybe a little bit, and maybe only a little bit because in the end it might help themselves. But they don't care about this country at all. They only care about themselves. And that's why they will never put in measures to help housing affordability. Measures that will actually help housing affordability. All these other measures they are introducing or have introduced have not helped at all. First home grants have not helped. The only thing they do is push up the prices of housing. If you give first home buyers $50,000 to buy a house, it pushes up the price of housing by $50,000. Anyway, I'm teetering on going on another rant. Maybe you already think this has already been a rant. All right. Mohammed Arian says that the yield curve inversion has broken. So one of Wall Street's favorite recession indicators looks broken, but it's still in inverted state. And typically, we don't go into recession. The United States doesn't go into recession until it's uninverted. We haven't seen that just yet. So it's a little bit too early to say it's broken. There is a good chance, a 50-50 chance, we go into recession. So I wouldn't say it's broken just yet. Bar chart, talking about American Airlines, getting hit hard in extended hours trading after it's cutting its outlook and announcing that its CCO is leaving. Now, this is interesting because wasn't that long ago that Air New Zealand released a negative trading update, and I was just thinking, most of the other airline companies' share price didn't move on that, and I would have completely sold out. In fact, Qantas share price has been going up, and this is another sign that there is a little bit of pressure in airlines. And fun enough, one of the announcements of the day is from an Australian airline, and it wasn't negative, but I think this airline is a little bit different, and maybe I'll discuss why when we talk about that country. A little bit of a dig at Kathy Woods. I was going to say Kathy Owen. Well, this is Kathy Woods. This is where Kathy Woods sold NVIDIA shares for a massive loss at the bottom. Now, I'm not sure if she sold her complete holding. I doubt it. She owned 800,000 shares of NVIDIA before selling it at the bottom. So did she sell all of it, causing investors to lose over 800 million in potential profits? Yeah, I'm taking a little bit of a dig at Kathy Woods. I don't mind people taking a dig at her. But who knows? Maybe the company she's investing in, maybe they're all going to be highly successful in the future. We just don't know. Okay, so now we get to the CPI. First one is from Warren Hogan. Inflation came in at 3.6% over the year to April. The monthly indicator had been as low as 3.4% earlier this year. This masks the fact that domestic inflation is running closer to 4.5% and showing signs of picking up in 2024. It does not appear that the RBA can be confident that it will restore price stability to 4.35% cash rate. So he's hinting now that there is a chance that we will, or increasing chance, we will see interest rates rising again. In fact, he might say that. My assessment is that the best way to avoid a damaging recession is a further modest tightening of monetary policy over the months ahead. So it's going to be really interesting to see what happens with interest rates over the next few months, particularly if inflation remains a little bit sticky. Scott Phillips also wrote, I thought I did one from Jessica Ramirez from Mumu. But anyway, I didn't bookmark that one. Scott Phillips says, well, that's ugly. Not sure I would define it as ugly, but monthly CPI rises to 3.6% in April. Pretty sure it was higher than expected, but I might be wrong with that. Only a month, of course, and perhaps volatile. He's absolutely right about that. It's only a month, but an increase is an increase, and obviously, but more importantly, it's not a decrease, which was hoped for. And excluding volatile items remains high at 4.1%. So let's have a look at the XJO. We'll get away from DermTech. I'm not sure why I'm on DermTech. This is an absolutely ugly chart, by the way. Don't even know what DermTech does. Let's have a look at the XJO, and we'll have a look at the 1 minute chart just to see if the XJO did dive at 11:30. Oh yeah, right on 11:30. There you go. It dove 0.2% in 1 minute. And actually, nice little rally. We have seen the XJO starting to rally. So the low was reached at about 1:46 p.m. And we have seen a bit of a rally. Is there any sort of support down about 7,660? Let's have a look at the daily chart. Not really. It's not looking as strong as it has been, the XJO, but we just want to hope that the XJO doesn't fall below 7,500, that level, around about that level anyway. Because last time we got there, in fact, the last two times we got down to that level, we saw a nice little bounce. So all eyes are on that level. And that could be a little bit bearish, and maybe it's because of inflation and rising interest rates. Well, the increasing potential of rising interest rates. Okay, that's all the bookmarks I want to talk about, or not the bookmarks, all the tweets or X's I want to talk about. Now let's have a look at the ASX today, and we'll start off with indices. Oh, nice, yeah, nice bounce. Tech has gone up nicely since 140, whatever it was. So every single sector is down. I was hoping one sector would be up. Industrial, staples, and financials all hit hard, including discretionary. And the best performing sectors have to do with mining, materials, energy. IT's had an okay day, only down 0.5%. And that was probably because NVIDIA and NASDAQ had a really good day. So anyway, and gold, yeah, gold has had a good day. I expected gold to have a good day, except maybe Ramilius. But gold up 0.63%, and the bank's down 1.79%. I'm just going to have a look at the ASX 20 just to see which companies have performed. I'm assuming maybe 2 or 3 were up today. Maybe Woodside, Santos, BHP, Fortescue, Rio Tinto. So maybe 2 or 3 of those companies are up today, but the majority of companies down. So let's have a look. I'm going to say, yeah, 3 up, 17 down. 2 up, 18 down. Wow. And the 2 companies up, BHP and REA Group. A little bit surprised by that. And then we also see Woodside, Goodman Group, and Santos. Not surprising, but all except 4 companies down by more than 0.5%. And the worst performing, we have Aristocrat, Fortescue, surprising there, Westpac, ANZ, so a few banks, not surprising. In fact, 4 of the major banks are in the top 7 worst performing ASX 20 companies. So people selling the banks. I'm not surprised. Banks are still way overvalued. Okay, so let's have a look at the best performing companies and the worst performing companies today. We'll start with the top gainers. I'm assuming I'm not going to see much here, although, yes. So 8i Holdings, best performing company, low turnover. Forget that. Hydrix, low turnover. Forget that. Then we have Cleo Diagnostics, number 3, up 32.4% on okay volume. Markup's fairly low. I'll have a look at that company. They did release an announcement today. And then I'll have a look at Desoto Resources, up 31.6% on good turnover, $1.2 million worth of shares there. And then markup is only 5.99 million. The other thing I like to look at is 1-year data. So compare the 1-year performance of all these companies to the 1-year performance of the top losers. You might be surprised. This is why momentum and sentiment is really important. So quite a few of these companies in the best performing companies today, by percentage change, are up quite a bit in the past year. And some are down a fair bit. Anyway, so we'll have a look at Cleo Diagnostics and Desoto later in the video. Otherwise, most of the other companies on this are trading on fairly low volume. And I don't remember any of these companies releasing an interesting announcement. And let's have a look by market cap. So Resolute Mining up, Westgold, expected that. Drone Shield up 7%. As a shareholder, that's a nice little rise. Aroa Biosurgery, Avita Medical, Shine Justice, Brisbane Broncos. Why? So I was hoping that my top 2 announcements of the day were going to be in this list. So they must be just up by less than 5%. Okay, so let's have a look at the worst performing companies today. And remember, the top performing companies had quite a few companies that were up on the year. So maybe it was half-half. Now let's have a look at the top losers. Look how many companies were, well, there's one company up 11,150%, but every single other company is down over the past year. And it just shows you negative sentiment can drive the share price down and down and down. And if we have a look at all these charts, I can almost guarantee you all these companies' charts are in well-defined downward trends. And you can increase your luck by trading using technical analysis. And more than likely, why would you be holding any of these companies if they're in downtrends? You could save yourself a lot of pain. And possibly most of these companies are just going down because there's no interest in those companies or these companies right now. For instance, there's one company here called DTI Group, down 15% on $110 worth of shares traded. Otherwise, many of these companies down on fairly low turnover. And in fact, I'm not seeing one company here that released, oh yeah, there's one here. Metro Performance Glass did release their results. Highly liquid traded company. Not even going to talk about that company. Even though the share price is down 11.4% on results, it's just a nonsense company because of the liquidity issues. And even the financial performance of the company doesn't really warrant attention. Okay, let's have a look at the worst performing companies by market. Neuron Pharmaceuticals, Rant Pharmaceuticals, a little bit surprised. They released a good announcement, was it yesterday or the day before, down 9.95%. But that company remains being a little bit volatile. Ramelius Resources did release an announcement with Westgold. I had a quick look at it. Not surprised that's down and Westgold is up, but I won't talk about that particular announcement at all during the rest of this video because it went over my head and I look like a fool if I try to talk about. Sheffield Resources almost made it into my top 5 announcements, down 9.1%. So yeah, interesting. I didn't even realize Sheffield Resources were now in production, but they are. Also have Bubs, Articore, Bet Makers, not bed, Bet Makers, and nothing else here. Well, so let's have a look at the top announcements of the day. First of all, we'll talk about these two companies that have done really well today, Des and Cov. Des is, I believe, Desoto. I've never heard of this company before. Up 27.63% up. It's right near the very important level of 10 cents. 10 cents is a natural resistance level. So for those, and this could be a bit of a learning exercise for some. So below 10 cents, the share price of a company goes up and down in 0.1 increments. Above 10 cents, the share price goes up and down in 0.5 increments. It's an important level because we do get a change in how share price moves from 0.1 to 0.5. And a lot of times the share price of a company will rally to 10 cents and then we have a lot of trouble getting above 10 cents. And a lot of times people put in their bids to sell or buy at 10 cents, at $1, $2, $3, $5, $10. People love round numbers for some reason. I love unround numbers. Anyway, so Desoto Resources did release an announcement today, and that's why the share price has rallied. Acquisition of high-grade rare earths project in the NT. And I'll almost tell you right now, this is the sort of announcement that won't float my boat. Is that the right word saying? That won't raise any tents or won't cause any interest in me. I don't care if you've acquired anything. It's like the first step towards possibly moving into production. I don't know, not sure how long this company has before it gets in production. It could be 10 years from now. I don't care if they've made an acquisition. So let's have a look to see if this has floated the boat of the market. I'm pretty sure that's the wrong saying, but I don't care. It's in my mind right now, floating a boat. Okay, and this must have been a recent listing because the chart goes back to late 2022. Probably a reason I've never heard of this company. They're mining exploring company. Chart is absolutely horrendous. And even today, really big volume. So the market has liked this in terms of, I want to start trading this company. But the share price has gone from a high of 17 cents to 9.5 cents. So a massive amount of selling today. So even though a lot of volume and the share price is up 25% or 27%, a lot of selling. In fact, the share price opened at 14.5 cents, went to a high of 17 cents, is now at the low of the day. This is a really negative one-day candlestick. Why has there been a lot of selling? Well, look at all the people who bought at high levels in the past. Maybe you bought the IPO, or maybe you had shares with the IPO or whatever, and you bought shares about 20 cents. More than likely, that would have been the IPO price. And you saw the share price drop from 20 cents all the way down to 7.5 cents, or even lower is the low. It looks like there was a day here, share price dropped to 6.5 cents, and you just need to get out. And then you've found your opportunity to get out today. You saw the share price rally above 15 cents and went, oh, got to sell. I just have to sell. Even though it's a small loss, it's so much more than it was a few days ago. That's pressure. Increase in supply of shares on the market, not enough demand to meet that supply, and that's why the share price has absolutely collapsed today. And if you have a look at the 1 minute chart, more than likely, or the high, in fact, was reached at 10:30. So only 30 minutes after trading began, and you can see the volume has dropping off. There is a chance a lot of day traders got in early in the action, and some of those day traders are probably losing money right now, and that will add supply of shares onto the market. So a really negative one-day candlestick, and this is exactly why I never buy, well, maybe not never, that's not the right word. This is why I rarely buy on the day a company releases an important announcement, a potential breakout announcement, because of this. I want to see the one-day candlestick and just see how bearish or bullish it is. If this was the complete different, if the share price closed at the high of the day and opened at the low, that would be a very bullish one-day candlestick. But I'm going to put this into my high volume spec watch list because I'm going to see and look and study how the share price moves or the market reacts in the following days. It wouldn't be surprising to see share price fall back down to 7.5 cents. Wouldn't even be surprising to see a little bit of bounce. Maybe this is a really good announcement, and this is just selling pressure from all those shareholders who bought in the past few years, year and a half. That is potential. So Desoto Resources. The other one was of Cleo Diagnostics. This was another recent IPO. Share price up 44.12%. Now, they released an announcement. Ovarian cancer blood test outperforms clinical benchmark. Now, this will raise a few of my eyebrows. Well, I only have 2 eyebrows, but I will look at this and go, this is probably a company to put on my watch list. I didn't open up the announcement, but if you do open it up, more than likely, most of the stuff will go right over my head, mostly. And of course, this is CommSec, and the announcement's going to take 5 years to open because CommSec is a stupid platform sometimes, not all the time. It's still my favorite platform because of the way they set everything out. But just the way or how long announcements are opened, I can go to Market Index and it's open in an instant. But for some reason, CommSec, maybe it's traffic, but it shouldn't be. Okay, so yeah, one of the reasons why I don't absolutely fall in love with these sort of announcements is because there's no financial numbers in it. I need to see some financial numbers, but they're just saying it's done well. Correctly detected 90% of early stage cancers compared to only 50% using standard workflows. So it does sound promising, but just because it's promising doesn't mean anything positive will happen in regards to, we'll put it this way, doesn't mean this company will fulfill that potential. Numerous things could go wrong. Maybe there's competition out there. But anyway, next thing I like to look at is just the chart. Remember, this company has a fairly low market cap as well. So Cleo Diagnostics. Now, this is a better chart than Desoto, but we have seen a little bit of selling as well for this company, but not the worst selling. What I mean by the worst selling is the share price right now is not at the low of the day. In fact, we have seen the share price rally at some point today, but the share price has fallen during the day. So there has been a little bit of selling. Share price has reached a high of 27 cents, currently 22.5 cents, 24.5 cents. So we have seen a little bit of a rally. So there are factions of the market interested in this company. And one of the reasons there has not been as much stress on the share price, more strain on the share price, is because if you look at the all-time high for the share price, it was 23 cents when they IPO'd. This company hasn't been long on the ASX since the 22nd of August. Just want to confirm that. We'll go a year. Yep, they listed in August. Yep, that's absolutely true. Probably another reason why I've never heard of this company, Cleo Diagnostics. It might be in my IPO watch list. There it is. It's in my IPO watch list, but I've never had a look at this company, and more than likely because they have no revenue. But an interesting one-day candlestick, but not the bullishness, most bullish one-day candlestick. But still, the share price has reached an all-time high, even though it's a short period of history. Okay, so let's have a look at. And the other thing is, just by this one announcement, you can tell what this company does. I'm just going to have a look. Here it is, a cash flow report, just to see if this company does or is selling any products. Oh, geez. So let's go here. I'll just show you, for those who have never seen this before, I'm going to open up this announcement or the cash flow report in Market Index, and instantly, here it is, instantly, and it's still opening up in CommSec. So what I want to look at here is the Appendix 4C, no cash flow. So this company is still a story stock. A story stock. That's probably the word about this company. It's still a story stock, and stories can go in a million different directions. And yeah. All right, let's have a look at the top 5 announcements of the day, starting with number 5. And coming in at number 5, some of the other companies that were close to making onto the list today were Auric Mining, Reed Cloud. In fact, I'm going to have a look at some of the share price performance of these companies. Haven't had a look yet. So Auric Mining, yeah, it's up. 4.46 million from First Gold from Jeffrey's Fine. Fair enough. Reed Cloud released their results, half-year results, up 1.69%. I recently did a video on this company in regards to Appendix 4C. The company is profitable, cash flow positive maybe. Not sure they are profitable, but they are growing. And it says here underlying EBITDA growth. Another company that didn't quite make it onto the list was Metro Performance Glass, and it's highly liquid, down 8.9%. And when I mean highly liquid, just have a look at the chart in ComSec. You can't see, there's one couple of candlesticks here, but no candlesticks. Means very little trading in this company. And if you have a look at the trade history, you can almost look at the whole yearly trade history in one chart, or one page. So about maybe 30 days of trading in the past year. So whenever I see a company like this, I just move on to the next one. Sheffield Resources was interesting, down 8.1%, production ramp up at Thunderbird. So the market didn't like it. Not sure why. Black Cat Syndicate almost made onto the list. Talking about Paulson's high-grade stockpile strategy, but not quite. And you can just see how boring today was. And Biome almost made onto the list as well. And they released an international market update and Health Canada approvals, down 5.33%. Okay, thought maybe that would generate a little bit of interest in the company, but no, it has not. So let's go to number 5, announcement of the day. A company called Fonterra Shareholders Fund. I'm pretty sure this is something to do with milk. And a couple of reasons why I've included this into today's video. They released a business update and financial year 25 Farmgate milk price. Okay, I don't really have that much interest in this particular company, but when I had a look at the chart, I went, oh, I didn't expect the share price or the chart of this company to look as strong as it does. So obviously, for some reason, it's still taking ages to open up. So obviously, maybe I should take a closer look at Fonterra Shareholders Fund. I have no idea what this company, no, I know what they do, but I don't know the structure behind this company. So they're talking about earnings per share 61 cents, reported earnings per share 58. They are profitable, $1 billion in profit after tax, New Zealand-based company, blah, blah, blah. Talking about milk prices as well. So I think milk prices are very important for this company. They've got the opening forecast, 725 to 875. Current season forecast is around the midpoint at $7.80. So I'm wondering if that is really important, and the share price performance of this company is related to Farmgate milk price. But the main reason I wanted to include this company is just the chart and the share price movement today, up 5%. So the whole reason I go through this process is I look for companies that are breaking out or potentially breaking out. And I have to say, this company is potentially breaking out. So just because I might not take a position in this company doesn't mean you don't have to. And the only resistance, the little bit of resistance moving forward for this company is as high as we saw back in August last year. Although if you look at the weekly chart, I'd say the share price, the last time share price was this high was back in January 2022. So we're almost at a 2-year high for Fonterra after share price was in a long-term downtrend. So maybe this is a shift in sentiment and the trend in the share price for this particular company. And you can see the highs back in 2017-18 were as high as $6. So this is a long-term downtrend, possibly coming to an end. Although it looked like it was possibly coming to an end back in late 2020, early 2021. So that's Fonterra, something or other. Fonterra Shareholders Fund. Milk, if you love milk, maybe this is the company for you. Coming in number 4, we have an airline. Alliance Aviation Services released a trading update at 2 p.m. I almost missed this. And wherever a company releases a trading update, I will have a look. And I thought this was positive. I had a quick look when they did release it, or when I saw they released it, and I was thinking this is okay. The company is confident. This is why I thought it was good. The company is confident of a record profit before tax that will exceed consensus forecast of 83.9 million. This will be an uplift in profit before tax of in excess of 60% over financial year 23. And I'll be honest with you, if I had to own one airline company, this probably would be it, because it's a little bit different from the rest. So they service a little bit different clientele. I'm pretty sure they also fill in like Qantas flights. That what I don't know what you call it, rent. They rent planes for Qantas or something like that. But they're primarily, I'd say they're primarily catered towards the mining industry, that sort of thing. And I do like that. And they have been growing. They're growing their airline base over the last 3 or 4 years, maybe even longer than that. And I actually do like, in terms of airlines, I do like this company, but I would never own an airline company at all, not Qantas, unless I was trading it. So let's have a look at the chart for Alliance. I thought this was a positive one, AQZ. Now the share price has been under pressure. So this is the weekly chart, has been under pressure and is in a downtrend, a long-term downtrend from the highs back in 2021. So that's maybe one of the reasons why the share price is struggling today, because the share price is in a downtrend. And whenever the share price is in a downtrend, there will be pressure on the share price because of all these investors who bought at higher prices. Best time to be owning this company, to have bought this company, was back in 2017. Beautiful breakout. Share price went from 80 cents to a high of 480. And if we have a look at the daily chart for Alliance, yeah, it hit the downtrend today and has pulled back. So just by looking at the daily chart, I don't have any interest in this company. This is not a breakout. I was hoping this could have been a breakout for the company, but at this point in time, not. I could think about buying shares in this company if it fell to about 275. That is a nice little support level for Alliance Aviation. Plus, this was a good announcement. It was a good announcement that hasn't been replicated by the market reaction. There's a bit of a difference between the market reaction and the share price movement. Number 4, Alliance Aviation. Coming in number 3, Straker. Straker Limited. Oh, up 6.2%. I'm happy with that. Share price was actually down on open. They did release their financial year results. Now, this is not a profitable company, but they are operating cash flow and free cash flow positive. Fairly small company. Used to have been Bailador, that's sort of like an LIC. This used to be one of their companies they invested in. Then they didn't really spin it out, but then it was listed on the ASX. I'm pretty sure they still own a few shares in this company. And this is sort of a language company. So mentions up there, AI-driven language and content services. Haven't really looked at this company much recently, but revenue is down. That's one thing I did notice. Revenue was down. So that is one little red flag, but it seems like they have got control of their costs and free cash flow of 2.3 million. And that was positive from the previous corresponding period, which was negative. And strong balance sheet with no debt and cash of 12.2 million. And they expect gross margins above financial year 24 levels, 63.8% in this financial year. Continued positive EBITDA and free cash flow generation. I actually did like this announcement, and I was a little bit surprised the share price did open down on open. So previous close was 48.5 cents, open at 47.5 cents. Now it is up. So it seems like the market has digested these results from Straker and liked it. However, if you do have a look at the chart, not quite breaking out, I think. Maybe I'm wrong. Yeah, not quite breaking out, still in a downtrend, but I think the share price is leveling off. And the market cap of this company is not that low, or not that high, 31.2 million. So if they can start to maintain this momentum, increase their profit, increase their cash flow, become self-sustaining, which looks like they might be at that point right now, this could be the low in the share price. So maybe this company deserves some closer attention, some more research, particularly those who are looking for these type of small companies that are profitable. This could be one of them. Straker Limited. Coming in number 3 of the announcements of the day. Coming in at number 2, the company, my biggest holding, by the way, IPG or IPD Group. Up 3 I will take this, up 3.7%. When the overall market is down, share price was at one point up about 7%. So a little bit of selling in the during the day, but that's not surprising because the overall market is fairly bearish today. So whenever you own a lot of shares in a company, whenever it's your biggest holding and you see an announcement released by the company titled Financial Year 24 Earnings Guidance, your heart skips a beat. I just wish they would put the word upgrade. It wasn't really an upgrade, but this was a good announcement. I'm not sure why the share price is sort of doing nothing right now. So expecting fairly good, healthy increases in EBIT and EBITDA for the financial year, excluding mergers and acquisition costs. They did make an acquisition, but EBITDA and EBIT expected to increase by about 40% from last year. Now, they did include NPAT. I just wish companies would include NPAT, but maybe they have no idea what taxation is going to be. I don't know. But EBIT is a pretty good indicator that the profit would be significantly increased from last year, maybe 30 to 40% increase from last year. So this company currently has a PE ratio of maybe 23. So once they do release their results, and if the share price doesn't move, that PE ratio would go down to, say, 15 to 16. And that is cheap for this company that is growing at a really nice clip. Now, let's have a look at the chart for IPD Group. And really, share price has been doing nothing. It's really going sideways, a beautiful uptrend from when it listed way back then. What's happening here? Auto fit, there we go. Silly trading view. Beautiful, this is a beautiful uptrend chart. There's me buying shares at $1.44 back in, was it February 2022, and I have not sold shares in this company just yet. Even though the share price the chart just looks right now, I just have not sold shares. Now, this one-day candlestick does look a little bit bearish because we do have a shadow above the main body, which tells us there has been a little bit of selling. And the reason there's been a little bit of selling is because all these shareholders who bought at higher prices, but good volume coming in. In fact, the highest volume we've seen for a while. You don't see many days like this with the volume, but I'm not saying this is a breakout for IPD Group because the share price is not at at least a 3-month high, preferably at a 6-month high. But I don't think the share price will fall much from here because this is sort of a verification that the company is performing at a good, is performing good. And if you sell here, or even if the share price falls to say $4, you could be selling a fairly cheap company that is growing at a really good rate. And finally, coming in at number 1, we have Fisher and Paykel Healthcare. Up 4%. They released their results today. Just one announcement. I'm not going to open it up because it's 230 pages long. And if I open up in ComSec, it will probably take 6 years to open because of how slow it is. But I don't really have to open it up to know that, or what I want to say anyway, because the company in March, 22nd of March, released upgraded guidance. So that was 2 months ago. Share price started to rally on the back of that. That was the breakout for the company. You already said that when we look at the chart, and I bought shares in the company at that point in time, a trading position. Then they released their results today, and the results, their numbers beat their expectations. That's the most important thing. That's why the share price is up, because the numbers were better than expected. Those expectations, they only released 2 months ago. And those numbers those expectations they released 2 months ago were an improvement on the previous guidance. So this company is actually performing way better than management expected just a few months ago. So things are moving forward for this company after a long period of time when this company had massive amount of headwinds to do with COVID-19. And it's now getting back to normal. So a good day for Fisher & Paykel. So let's have a look at the chart for this company. You should be able to see what I mean. Whenever I say you can increase your luck by buying charts or companies whose charts are in really nice uptrends. And Fisher & Paykel is one of those companies. So there I bought on the 22nd of March, bought some shares at $24 on the breakout. That was a breakout. And the share price struggled just after that. They did a recall. So there was a little bit of a dip in the share price. But the share price moved into an uptrend, a little bit of pressure in the last 5 trading days before they released their results, by the way. So I think the market was expecting the results maybe to be worse than expected. But the market has been fooled, and the share price today did up to 27.50, which was a long-term high. So let's have a look at the weekly chart. Yeah, that would have been almost a 3-year high. And this is a quasi high quality company. I would define this company as high quality. In fact, if you just go prior to COVID-19, this is a high quality chart. Share price did struggle for a period last few years because of those headwinds in regards to COVID-19, but I think the company is now coming out of those headwinds, or those headwinds are lightening off, becoming more of a zephyr, and eventually that zephyr headwind will become a zephyr tailwind, and potentially, maybe in a few years' time, those zephyr tailwinds will become a gale force tailwinds. Who knows? Anyway, share price and the chart is looking quite bullish right now for Fisher and Paykel. That's all I got for today's video. I have 2 minutes. I wanted to finish recording this video at 4 p.m. So I have 2 minutes to go, which means the market will be closing in 12 minutes. Hope you've had a good day. Hope the rest of your week is fabulous. And that's all I got for today's video. Have a good day. Talk to you later. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.